We're all trying to make sense of basically how to play, frankly, the next 2 weeks. Maybe that's the question. How do you play that with the potential of a stimulus out there, if you think it's even happening, and then the election right in front of you?
Yeah, good morning, Andrew. And that is the big question. It's the question that we're getting the most from clients. But let me start here. So it'll be sort of a non-answer answer to start, and then we can get into some of the more details. But I started with this quote yesterday during the CNBC FA summit, and it's all of humanity's problems stem from man's inability to sit quietly in a room alone. And that's everybody's problem right now. Everybody is sensing this change. Everyone wants to do something in their portfolios. Mike Santoli wrote an article not long ago. I'd encourage people to take a look at it. But basically what he said was, look, to use the election, to use the next 2 weeks as a catalyst for making specific investment changes is just so difficult. You have to game out who's going to win the election, the makeup of Congress, the policy priorities, the impact that's going to have on the economy, right, and all the way down the line. And I think to be able to do that without the benefit of hindsight is just so difficult.
Right. Jeff, let me ask you about this. President Trump just tweeting literally as you were getting on the air there. He says, quote, remember, Biden's going to raise your taxes at a level never seen before. This will not only be very costly for you, it'll destroy our economy, which is coming back very rapidly. You buy that argument or not?
Well, look, I think it's a time horizon thing, and it's interesting if you look at some of the macro indicators. I think the 10-year Treasury is a good one. So listen, in the near term, I think the market is gaming out a Biden victory means a larger stimulus. And if you look at the debt projections over the next number of years, they're more or less the same for Trump or Biden. But the policy mix of spending is so different. Biden's going to spend $11 trillion and then have that offset by taxes and savings. And a lot of that's probably going to happen up front in his administration. So if you look at the 10-year Treasury, just as an example, it's been so highly correlated to the odds of a Democratic sweep that, I think that the market is trying to anticipate what that means for growth in the first half of 2021. So I actually think you get this big fiscal thrust. However, I do agree with the president in the sense that looking out past that, we're crawling out of this really big earnings hole right now. So anything that's going to reduce corporate earnings, if you get a major increase in corporate taxes, I do think that ends up being a longer-term headwind for the market. So this narrative that a Biden win or a Democratic sweep is necessarily good for the market longer term, I don't necessarily buy that. But I do think you could get this fiscal thrust in the economy in the first part of the year, which then could have implications for the market.
Real quick, do you think that if there's a Biden win, there's a sell-off in stocks, at least temporarily, as people try to make good on their taxes?
Yes, I do think that can happen. But remember this, I'll say it again, Tina, where are people going to go? Public pension funds, 80% of them still have annual return targets of over 7%. People still need to own stocks. There's this gravitational pull toward risk. So you could have near-term selling, but in the long term, I actually don't think it matters that much.
Shepard Smith here. Thanks for watching CNBC on YouTube.